Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. Markets have been range bound with a slight bias for dollar strength in the Asian currency markets, but focus today would be on the PMI numbers and the jobless claims data from the US. Now, the PMI should give evidence about a potential slowdown in the US economy, while the jobless claims will give some indication about how tight or loose the US job market sector looks like. Morning, JK, what are the key things you are looking out for in the markets currently?
Yeah, good morning. A lot, of course, because we have a holiday in US tomorrow. So today we'll have the jobless claims data along with the ADP, ADP numbers, private payrolls report that is. And the UK is heading into an election tomorrow. Yes, let's look at what happened yesterday. We had the job openings data as per Jolt's numbers. That actually came at 8.14 million for the month of May, which was higher than the 7.95 that the market was expecting. But despite this higher number, this is considered to be kind of backward looking, or rather you could say historical data. And the significant part is that even the April number was revised down quite a bit. So it is a volatile number, not to be relied upon too much, but as a trend, if you look at it, the number job opening numbers have been falling in the last 2 years. So that is the key takeaway. So the labor market is definitely cooling down. And we will have more confirmation, or rather more evidence, if at all, by the jobless claims number, which has been recently increasing. And the continued claims have been not relenting. It's also not coming down. So job market is something that we'll continue to focus on. ADP numbers are expected to be lower than last month. So in this context, what Powell observed yesterday in his speech in a panel of ECB event in Portugal was that the labor market continued to be somewhat strong. And his observation was that the inflation number, recent fall, was good, but not, they would like to see more of similar data before. So he's basically non-committal on, whether there will be a near-term rate cut and how far they would go, whether there's a change in their outlook for rate cuts. These are something that still the market has not got an answer from, as he spoke yesterday. So the market continues to discount 67% probability of a rate cut in September, and that is what it was before Powell spoke, or even before the job openings data as well. There was a lot of expectation that Eurozone inflation will drop more, but then it was quite as expected, and there was no surprise there. Around 2.5% for the core inflation, which was what was expected, and therefore not much relief, or rather not as much relief as the market would have expected, to enable ECB to cut rates again in July. In all probability, a move could be much later, somewhere in September. But then again, even ECB would want to wait for what Fed does. What the outlook for Fed rate comes in the coming months, after perhaps the JOBS data, or even the CPI number this month, later in the second week. So all of this really did not move the dollar much. Dollar continues to be in range. Because there are more events ahead, French elections, and the jobs data on Friday, FOMC minutes, all of which will have some influence on the dollar. Therefore, market is non-committal. They're happy to go on a long weekend starting tomorrow, and perhaps we'll get a directional move on the dollar at least a relatively directional move on Monday only. Meantime, oil prices have inched up closer to 88, where there is a lot of resistance. That I'm talking about the Brent oil. Oil prices have gone up quite a bit, due to the increasing summer demand, then the delayed impact of the output cuts by OPEC plus. There is a significant drawdown on inventories as well, and these are actually pushing the oil prices higher. Strong resistance at 88, and if it breaks, maybe we move towards 90. And this is not a good news for inflation, because while inflation has shown a downward tendency in all the major economies recently, these higher oil prices can be reflected in the coming inflation, and that puts monetary policy easing in question again. So that's something. And another point is the French political scenario, which remains very, very fluid and the most uncertain situation, because the post second round of elections, various probabilities are being thought about. The right wing can probably get a majority, manage to get a majority, which looks less probable as of now, but there can be post-poll alliances. And even the centrists are trying their best to win away the voters from the right wing. And and they're also projecting France on a real difficult situation if the right wing comes to power. So markets are looking calm right now, but I think there's a lot of uncertainty beneath the surface, and people really want to see what happens in the election in the second round on Sunday. So if you summarize the situation, you have a lot of things in the pipeline which can influence the markets, both on the risk side and the dollar. And we'll have to wait out for the next 3 days. Keep it cool, not committing ourselves. On the rupee, yes, there was good support at 83.45 yesterday, and we have moved away from the support of 83.35 and now trading in the new somewhere in the middle of the range at 83.50, and possibly we test the 83.60 levels because of the US yields, and also the uncertain situation, as well as the oil prices being higher. So the range of 35.60 continues, and we really need a big trigger from the global markets for rupee to move out of this range. Thank you.
Thank you, JK. And Powell's speech mentioned that the labor market remains somewhat strong. Recent fall in inflation number was good, but more evidence is required before taking call on rate cut. So market participants who have been anticipating something on the rate cut from Powell have been a little disappointed because of his neutral stance. Oil prices have inched up due to the summer demand and the delayed impact of output cuts. Now that's quite significant uh, because it impacts the rupee as well, which has taken support at around 83.45 and continues to be in a 35.60 range. So markets would be keenly looking out for how oil prices move from here. But as JK mentioned, it's filled with resistances at these levels, and we'll see how that narrative plays out. Tomorrow, of course, we have the UK election result, and that's again something that the sterling watchers would be looking for. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.